Fossil fuel subsidies should be phased out before the next federal election, and carbon-intensive sectors should be given targets for emission reduction, according to a new report. These are recommendations put forward by the Investor Group on Climate Change, which represents investors with funds totalling more than $1 trillion in Australia and New Zealand. Let's bring in Erwin Jackson now. He's one of the authors of this report and director of the Investor Group on Climate. One of the things that jumps out at me here is recommendation 4, Erwin, the safeguard mechanism baselines. How much does it come down to getting that right in your view?
Well, the core thing that investors need from policy is long-term signals that they are going to both limit the damages that climate change itself will cause, but also unlock the investment that's required to make the transition in an orderly and just way. So for major industrial sectors like the safeguard, just like every other sector that's covered by other mechanisms, they need to get on a pathway to limiting warming to 1.5 degrees, because from an investor's point of view, they're trying to manage climate risk and opportunity across the entire economy. If every degree of warming above 1.5 increases damage to the economy, and we're already seeing the impact of that through the extreme events in Australia, but we're also seeing a massive opportunity to invest in Australia in new industries, in existing industries to clean up their act. And that's the direction long-term capital is going. And they're looking for policy settings to support that investment, not undermine it.
One of the other things, I think a lot of corporate Australia is already signing up to this disclosure regime, but you think that a climate risk disclosure needs to be broader and more detailed? How well equipped is our private sector right now on that front?
Well, certainly some companies are very well equipped, and we've seen over half of the ASX 200 make disclosures just last year. The issue for investors is those disclosures aren't comparable. They're not necessarily very transparent. So it's very difficult for investors to look at what a company says and justify an investment in that company if there isn't a lot of clarity around how they're managing climate risk and opportunity, because it's a mainstream discussion amongst boards and investors every day in Australia. And it's really about making sure that if you're buying a house, you're buying a car, you want to make sure the foundations are solid, you want to make sure it's going to work in the long term. And that's what investors are really looking for from companies, and having a mandatory disclosure regime, which I think the entire financing sector pretty much supports now, is important in terms of making sure that we have an efficient market, making sure we're getting the capital to the industries we need it, and making sure that we're not actually putting industries at risk and stranding assets as they're shut down unexpectedly because those risks, those future risks, weren't seen.
Erwin Jackson, Director at Investor Group on Climate Change. Thanks as always. Appreciate it.